This week, the Bank of England made a decision that almost everyone in property is misreading. They held the base rate at 3.75%, and most of the headlines focused on what they didn't do. But the more important signal is in something else entirely. In this video, I'm going to break down exactly what happened, what it actually means for property investors, and the 3 things you should be doing this week as a result. The Bank of England's Monetary Policy Committee held interest rates at 3.75% on Thursday. That was widely expected. Most economists predicted a hold, given that inflation is still sitting around 3%, above the 2% target. What was less expected was the language. The MPC's commentary leaned more dovish than previous meetings. They acknowledged the post-Iran ceasefire, the falling swap rates, and the fact that lenders are already cutting mortgage rates without them needing to. Markets reacted immediately. Traders moved their pricing off the next rate out closer. June became the new favourite for the next move down. That's the actual story. Here's what most investors miss when watching these announcements. They focus on the headline rate, but mortgage rates aren't actually set by the base rate directly. They're set by swap rates, which respond to expectations about future rate moves. When the bank's commentary leans dovish, swap rates fall. When swap rates fall, lenders cut mortgage rates. That's why HSBC, Halifax, Santander and TSB had already started cutting rates before Thursday's announcement. The dovish tone on Thursday will accelerate that. Expect more lenders to cut over the next few weeks. For property investors, this is the critical part. When mortgage rates fall, 3 things happen in order. Number 1, buyer confidence returns. People who had been waiting on the sidelines start moving. Number 2, competition for property increases. Multiple offers come back. Bidding situations return. Number 3, vendor motivation drops. The same vendors who were accepting 30 grand below asking price last month start holding on for full price again. The entire chain takes about 60 to 90 days from the moment confidence returns. We're at the start of that window now. Now here's why this matters specifically for Yorkshire. Yorkshire and Humberside just hit an 8.6% average rental yield. It's the highest on record. Yorkshire rents are up 31% year on year. House prices are still accessible. When competition returns, the high-yield Yorkshire market won't disappear, but the deeply discounted below-market value deals will get harder to find. The investors who buy in May or June at current pricing will look like geniuses by August. 3 things investors should do this week as a result of what's happened. Number 1, if you've been waiting for clarity, you've got it. The direction of travel is down on rates. The opportunity is in the next 60 to 90 days, not at some indefinite point in the future. Number 2, if you've been preparing capital, get it deployed. 30,000 to 35,000 deploys a single Yorkshire investment property. Don't sit on cash watching inflation eat away while you wait for perfect conditions. Number 3, if you've been working with a sourcer, lean in. The investors who get the best deals in any market are the ones who are first in the queue when good deals appear. Now is when those queues form. By the way, if you've got 30,000 to 120,000 ready to invest and you want it working hard in Yorkshire property without you having to do anything, drop Yorkshire in the comments below this video. I'll send you a link to book a free discovery call. Worst case, you'll walk away with absolute clarity on what's possible for your specific budget. Best case, we go and find you our first deal together at this market prices before they change. So what do I actually think happens next? I think we see at least 1 base rate cut by August. Mortgage rates will continue falling. The window for buying in a soft Yorkshire market is genuinely closing. The investors who pay attention right now and act on it are the ones who will be telling a different story in 12 months' time. Don't be the investor who looks back at spring 2026 and wishes they'd moved faster. This is Kaylee, the Yorkshire Property Sourcer, helping you invest in property the right way. I'll see you in the next video.